I'm going to introduce our panel, and then I'm going to ask them to kind of introduce themselves by way of sort of just giving a brief. It can be their view of the subject, it can be what they think is most important that they're doing, and then we're going to get into Q&A. So just down the road here, Valerie Pichet is Director of Community Relations for TD Bank Group, one of those big bad banks. Jeff Brown is Vice President of Community Banking for Meridian. Sandra Huculak is Managing Director of Corporate Social Responsibility and Community Investment at ATB Financial. Maia Graham-Derham is Manager of Financial Access Programs at Assiniboine Credit Union. Lauren Dobell is Director of Strategic Partnerships at Vancity. So just a round of applause for our panelists, please. And I'm going to turn it over to Valerie.
So I am Director in Community Relations at TD Bank Group. I've been with the organization for over 2.5 years now. And we have different areas of our corporate philanthropy where we focus those donation dollars. And one of those is around financial literacy. And quite frankly, we're switching it more to financial education. Not only does it align with the wording in the US, but it also aligns just generally where we see this as a pure education piece. And so that's how we want to highlight it within the organization. So I can say within the last 2.5 years, there has been a greater and greater focus on how we're addressing this issue. Not only through, the 2008 economic downturn, but mainly aligning with our community giving on the US side. And I can say that we made it a priority on the Canadian side around 2010. And since then, in North America, the bank has invested in our communities over $12 million when it comes to community-led initiatives. And a lot of those is direct delivery from our own employees, sharing that expertise and knowledge. And on the Canadian side, with a greater focus on the low to moderate income segments. And so bringing that forward, we spent a lot of time kind of strategizing how we want to do that. And I can say even this year with the launch of Financial Literacy Month, we took it another step further. Over the last year, we've appointed an executive champion within the organization to help coordinate our efforts in financial education. And we are doing so with different levels. So we're dealing with strengthening the financial education skills of our own employees, focusing on our customers, and then focusing on the community. So my role is more around the community side with an amazing team that we have who are here today. So I don't do this by myself, far from it. And so what we've done is really look at how we want to do that. So now, and we hear this over and over again, we're focusing our efforts to tailor our programming with specific segments. We've heard it over and over again, one size does not fit all. So we look at tailoring this for youth, tailoring it for our new to Canada community, tailoring it for the Aboriginal community. And so what we do is work with the not-for-profit and charitable sector, organizations as amazing as Prosper Canada, obviously. ABC Life Literacy, who's also here, has been spearheading some of our core curriculum that we look to deliver. And then we engage our employees in that delivery. So I'm happy to give more details as to what we do in that space, but it gives you a little bit of an overview of what we do and everything we're doing for Financial Literacy Month. And there's a big focus around parents talking to their kids about money, the education system. And it's the first year where we really, really aligned all of these activities and tactics through our branches, through our employee internal networks, as well as through the community, with a one coordinated message. So we're pretty proud as to how far we've come in this space.
Thank you. We're going to toss to Jeff.
Thank you. Again, my name is Jeff Brown. I'm the Vice President of Community Banking. What I do at Meridian is lead our branch distribution network, and that's a growing distribution channel of branches across Ontario that meet the needs of our members each and every day. We are owned by our members. We are there to serve the needs of our members, and those members include folks of all shapes and sizes and economic realities. And so what I see every day is a changing landscape in the province of a number of things. The realities of banks potentially downsizing in certain markets, removing access to Ontarians in some communities, and the realities of what that means and replacing it with technology. Financial literacy to me is a big part of that, and I don't know how much has been talked about around entrepreneurship. Many entrepreneurs today, the future of on the Ontario economy, you could argue, are struggling as well and are low income. And those people's needs should be considered as well from the financial institutions, because I think that sector is an area that we can all do a lot better supporting. Meridian gives back 4% of its profits to community programs, and we're very proud of what we do. And what's really exciting about how we do it is we actually enable our branch manager and our branch teams to make the decisions locally on where those funds go. There isn't a corporate sponsorship submission process. It's their money, and they can decide where to use it best to support organizations. And the other thing, things that we do a little differently that I think really speaks to the challenges that low-income families are facing. We have a policy in place at Meridian where we'll call you if you go overdrawn. We'll provide you short-term financing when you need it. We make sure that we understand the needs of our members, because again, we are owned by our members, and it's critical for us to never forget that and focus our program and support on those things that support everyone.
I'm Sandra Huculak. I'm Managing Director of Corporate Social Responsibility at ATB Financial in Edmonton. We're a provincial crown. We were created in 1938 as an alternative for Albertans during the dirty 30s. We currently have 172 branches around the province and 133 small agencies. And some of those agencies are in towns of no more than 200 people, so we're providing those banking services to some of those remote communities all over Alberta, and we're working with Big Stone Nation right now to build a agency up on just outside of the reserve there. In the last, I've been with ATB for 7 years, so I was the lead creating the CSR strategy for the company, and with that, through consultation with our customers, with our shareholders and community partners, is where does it make sense for us to make a difference? So I spent a lot of time doing that consultation before diving into programs and such, and a natural partner would be the United Way in Edmonton, who we partnered with over 4 years ago in providing funding for a match saving program called Empower You. When sitting down with United Way and the 7 agencies that were part of this match savings financial literacy program, we took the task to hand, and not just taking the information from the agencies in United Way. I actually asked if I could actually meet some of the women living in poverty, because as a financial institution, what do we know about women living in poverty? So we hosted coffee parties with women from the various agencies, and we learned a lot, and it was through that consultation with them that we built our banking product, that it met those needs. They told us things like they don't want a debit card because it would get in the hands of the wrong people. They told us not to send banking statements home. So the program that we've successfully been running for 4 years was based on that consultation and based on a collaborative approach with the agencies. One of the things we've learned through this program in particular is many of the women coming in have had issues with banking situations, whether they're fraud charges or other. So in a banking world, in our world, it's called undesirable customer. If we want to open this account, we have to look at these situations and say, if we believe wholeheartedly in this program, we've got to waive those. We have to waive that flag within our system so that they can successfully open that program, so that they can start working toward a healthy financial future. So another program that we've been running around the province is called Junior ATB, and it's partnerships with elementary schools. We have 51 of them in the province right now. We've partnered with 51 schools where we actually, they run a bank during the lunch hour. So grades 4 to 6 are the president, CEO, and the marketing directors, and they get in there and they actually learn financial literacy by actually doing the job of bankers. They've got tellers, they have backroom people, and those Junior ATBs have been very successful. We actually do every year a round table with Ask the CEOs. So we bring the CEOs from those banks to our president CEO, and you'll be darned if you get those questions that gets him wiggling in his seat. So those are some of the programs they're running at the corporate level. Within the branch and regional networks, they have their own financial literacy programs. We do a lot of outreach with post-secondary students, and we're also doing a lot with New to Canada, where we've got a program where we actually meet the individuals at the airport, escort them and bring them into the city and actually spend time with them talking about the region, talk about the city, and then talk about the wide range of financial services available to them.
Maia?
Hi, so I'm Maia from Assiniboine Credit Union. We are one of Manitoba's largest credit unions. A little bit about Assiniboine. We are a proud member of the Global Alliance for Banking on Values. So it's an international alliance of financial institutions that believe that banking is more than just numbers and balance sheets, that a financial institution should have committed at its principle of values is people, planet, and prosperity. And without all three, there is no success. And there are 3 Canadian financial institutions that are part of the Global Alliance for Banking. And I'm proud to say all 3 are represented here at GABV. So we have Vancity and Affinity Credit Union as well. What that means for who we are as a credit union, we are directed by our members to do good works in our community. Our vision statement is that we believe in a world where financial services are used in local communities to create sustainability for all. It doesn't necessarily mean that you need to be our member, though we'd love you to be. It means that we want you to be sustainable and healthy and successful, whatever that merit and whatever that benchmark is to you. Our programs have been designed truly in partnership with community. Very little have we come up with on our own and said this is going to be a great idea. And usually when we come up with something in isolation, it usually is not a great idea. We are a founding partner in cooperation with Seed Winnipeg and the United Way of Winnipeg for the Winnipeg Asset Builders Partnership, which is an amazing partnership that has 12 organizations that provide asset building to various communities, including women's shelters, newcomer societies, Aboriginal organizations, the general population of anyone living in low income in our province. We also have a partnership, also again with Seed Winnipeg. You'll hear me say them a lot. We have a wonderful relationship. We're very close bedfellows. We have one where we work with communities who live in our inner city that are demographically, geographically indicated as a low-income neighborhood. We work to be able to provide RESPs, GICs for them to be able to invest bursaries and help families access the Canada Learning Bond. To date, we've invested over $650,000 of these provincial bursaries in for families of over 1,200 beneficiaries. And if we assume that every single one of those beneficiaries meets the Canada Education Savings Grants of 40% and receives the full $2,000 for Canada Learning Bond, is $3.3 million invested for these low-income families. And how we make that easier is Seed told us, getting to your branches is hard. Our families, they want to do these things, but you make it hard. Your paperwork is confusing. Your branches are intimidating. The bus ride is hard. The childcare is hard. Life is hard. Make it easier. And so we said, okay. And so last Saturday, we had 4 volunteers that showed up at Seed Winnipeg to open up our RESPs. And we had 2 branch tellers that were learning because they want to become account managers. And so they opened the RESPs. And our chief financial officer was there administrating and filing paperwork and watching kids and hanging out. And on Monday when I got here, I checked my email, and he had sent me an email saying, that was the most amazing experience of my life. It was so nice to see those families and be there and meet my staff and meet my members and meet my community. And that's who we are. We're a place where your chief financial officer shows up and says, what do you need to open an RESP? Do you need me to hold your baby? Do you need me to photocopy your ID? And we're proud of that. That's who we are. And I'm just going to maybe do a credit union pitch. We are that way because our members told us to be. We're a financial institution that does what our members direct us to be, and our members said, you are responsible to us in our communal health. Very much like a room like all of you, they said, we don't like where you're going. We felt like you're becoming a bank, and that's not your history, that's not your roots, and we call you back. And they became members, intentional members of our credit union. They attended our board meetings, they stacked the deck, they ran our board for 5 years, and we are now the legacy of those members who changed the voice of our financial institution. So we are because our members have said this is important, because people like you said this is important. And we live that every day, and I can't wait for the many future wonderful things. So.
What a nice introduction for a co-op. So Lauren Dobell, I'm Director of Strategic Partnerships and Advocacy at Vancity. I often suppress the "and advocacy," much though I'm trying to promulgate the nickname Spa Director. But I think in this crowd it's both appropriate and speaks to the lens through which I see my role. As colleagues have said, I don't think you can I don't think you can overestimate the importance of being a co-op, a cooperative financial institution. Although we do have the term responsible financial institutions for other good financial institutions, but they're not co-ops. We exist to serve our members, for the well-being of our members. Our only source of capital is our member deposits. The only place we put our capital is in our members and our communities. So it's the real economy end to end. And that's incredibly important for understanding how we see our role as being to ensure the well-being of our members. In this regard, as Maia said, we belong to the Global Alliance for Banking on Values. Our values, enshrined in core principles that guide our work, are financial inclusion and social justice, which we often combine as a more encompassing economic inclusion, environmental sustainability and cooperative principles, to which we're adding meaningful reconciliation in recognizing the Declaration of the Rights of Indigenous Peoples and the reconciliation framework it provides. So in this respect, we tend not to make a distinction between business and philanthropy. We look at community impact investment, and the business that's generated by that investment allows us to do more of that investment. We tend also not to talk about corporate social responsibility as if there were any alternative to that. I mean, that should be the assumption, and everything we do on top of that is what we're all striving for. I'm masquerading a bit today. If it were me introducing myself, I would say that Vancity tends to work in 3 orders of magnitude, that we share our success. Annually, we return 30% of our profits directly into our members and our communities. But that's the beginning. We also have, as a very small financial institution compared to a bank, but a very big co-op, we have about $20 billion of assets under management. And we're looking at steadily migrating that book of assets into impact so that nothing we do can be seen as not contributing to the well-being of communities. We're at the beginning of that journey, but we're working on it. And for me, the most exciting part of this in my role is that we work with community and business and foundation and research and partners and governments at all levels to shape an enabling landscape for economic inclusion and environmental sustainability and cooperative principles. So that's where you reach scale and magnitude. But I'm actually not here in my capacity. I'm here in the capacity of a colleague who said, hey, you're in Montreal anyway. And so I've been cramming to learn, the actual nitty-gritty of what we do in all of these areas. And when I put out a call to colleagues saying, if I need to know a lot about lending products in the next couple of days, what do I need to know? And the reams that came from all corners, some of them organized by the financial empowerment typology, which was very helpful, and some of them by marginalized or underbanked communities, which was also very helpful. But it's a whole slew, and so I'm hoping the questions will draw some of it out. I think just to end by a story, because we're always told to tell stories, and the one that just struck me as people were introducing themselves is that when I began to work at Vancity a very few short years ago, at your 6-month point, you're invited to a party to meet people who have been there for a year, 5 years, 10 years, 20 years, and a surprising number of 30-year veterans. And people told stories about what they enjoyed about the work, and there are lots of good stories, but the ones that blew me away were the people who don't work in collections, because we don't have a department for collections, but do work in the area that would normally be responsible for foreclosures and things. And the stories they told were the most amazing stories of how they didn't have to do their jobs in the end, that they had found a way not to foreclose, and they'd found a way not to call in a loan, and they'd found a way to make sure that people's lives didn't go off the rails. And from parts of the organization that I rarely get to see, this was an amazing introduction. So thank you.
Well, thank you all. And just a reminder to you folks, as they speak, if questions occur to you, just hop to the mic and I will include you. And I apologize to everybody over here. I've got my back to you and I know blocking some of your view, but I can't do anything about it. But I'm sorry. I wish there's like a third camera. I'm going to start with Jeff, but I think everybody will probably have a different answer to this. But I don't want to simplify because there's so much ground for discussion here, but if there are key priorities or a key priority or some kind of journalistic simplification like that, if we're talking about interventions or policies or behaviors to help, and you made the very valid point that when we talk sort of low income, it could be an entrepreneur, it could be somebody who's actually not low income but vulnerable because they've run their debt up. They could be quite wealthy in some ways. But is there sort of starting points, in your view, of if you had to have sort of one or two things that we tackle first to broadly solve some problems? Jeff, where would you start?
Where would I start first? From Meridian's perspective, policies aside, we as financial institutions that are here to provide products and services, we have goals to be profitable, and make no mistake, as a credit union, we're still in business of making a profit. But we can make profits that are in the best interest of members and an organization. So I guess where I would start would be, sort of a temperature or a test against the things that we offer our members today. One of the first things I learned when I joined Meridian, was our ability to, treat all members equally and fairly, but do what's best in their best interest. And, those are just words, but when you actually see it happen, it's quite something. And what it led me to believe was that, there is a sustainable way to be profitable and serve members' needs. But, I would start by making sure that, what we were doing each and every day was serving the needs of those very groups of people you just mentioned. And I would add seniors to that group as well. Because I think the seniors group and the emergence of them, with continuing low interest rate environment, seniors retiring with debt, and access to capital often being pushed on them, is something that we need to be aware of, because there is a significant intergenerational wealth transfer occurring, but there's also a significant lack and future lack of sustainable pensions and retirement income for many people. So I'd make sure that our products and services were transparent, and that we promoted them in a way that was truly in the best interest of our members, and I test that across each and everything we do.
Can I jump in? Okay, so for us, I think that the key things are, we've talked a lot about financial insecurity, and so people, regardless of income, if they are insecure in finances, that there are challenges that come with that, and I do believe that to be true. But the reality is the outcomes and the harm that can be done to somebody who is low income versus somebody who is high to moderate income when they make bad choices, the impacts and the harm that is done to a low-income family is 9 times worse or 100 times worse. And the reality is that if you are a person living on social assistance, and a payday loan of $800 can bankrupt your family, whereas mine, where I make in excess of significantly more than that, a loan of $800 is not going to bankrupt me. So when we're talking about people who live in low income, I think that though we do things for the benefit of all members, there are some that, because of their economic reality, they are incredibly more vulnerable. So I'm going to be speaking about people who live at or below the low income cutoff, because though I believe there are services that need to be provided for people above that, I think there are more options available to them already. So speaking about people who live in low income, I think the two things that we really need to focus on are the outcomes of payday loans, which the challenge with that is if you're at low income, you can't afford to repay a loan no matter who it's from. So how do we make sure that Vancity, ACU, Meridian, everybody doesn't become the new money mart? So that is a challenge, but Vancity, and I do believe it is First Calgary, have both offered and created really interesting products that provide an alternative to that, the Fast and Fair and the Credit Crunch. For our credit union, I believe that is also one of the next products we need to start looking at. Financial institutions of the mainstream have removed themselves from low dollar financing, under $5,000, and it's horrific, and it's hurtful, and it's harmful. And I lump myself in that lot because we don't do it, sorry. The other one is that a product that does no harm. And I really like sort of the medical terminology of I will do no harm. And I think financing, we're finally getting to the point where we realize that we can cause incredible amounts of harm to people's lives, though we don't intend to. And we may have the best of intentions, but what we actually do to people is devastate their lives. And so what are the products that we can offer and create that don't do harm to people, that balance that line between being a paternalistic force, we won't allow you to do A, B, and C because we believe it's in your best interest, but also we don't allow the product to do A, B, and C because we believe that the harm that it causes is too much. And I think those are the two places that we really need to focus right now, at least for people living on low income, is increasing the ability to manage the money that you have and using it safely and affordably.
Valerie?
Yeah, so I think I'm taking a little bit of a different angle to it in the sense of, to your question, Amanda, is where do you start and who do you start with, or do you sign a target? And I think the way I would position it is I would do it in a way of providing the access for us to be able to provide the advice. So the example I'll give is we have a online community called TD Helps. We've helped, it was launched just a few years ago, and over 40,000 people have submitted questions. Whether you're a customer or not, there is a live expert that answers all of these questions. And so to me, I don't want to necessarily pinpoint a certain segment of the community to say this is where we need to focus, but to make advice available and to provide it in an accessible fashion. So, you can go online. We do provide everyday banking services advice, whether you're employed, unemployed. There is the reality that we are regulated. We have to, meet certain conditions, but we are there to be able to help answer those questions. And I understand that the official institution and the physical building, it can be an intimidating one. That's why we have the online community on the flip side. And then on the other side, that's also why we work with the not-for-profit and charitable sector to help develop and run and execute the programs that we fund. We get that also the actual bank can be an intimidating institution or factor to talk to. But when you go through the not-for-profit, so working with the United Ways and those agencies, working with the ABC Life Literacies, Prosper Canada's, you have way more expertise in this space to help us develop the tools that people and resources that people may need.
I'm going to ask actually Lauren and Sandra to hold off. I do want to hear from you, but I promise that as soon as we can, we'll get to your questions.
Thank you very much. I'm Jerry Buckland from the University of Winnipeg, and wonderful comments. I was just wondering if you all could share about what you think is the Canadian model for dealing with financial empowerment, and just kind of thinking more broadly as compared to other countries. Like, how do we, as a society, deal with financial empowerment, and what is the role of financial institutions? I was at an international conference recently where there's an Australian organization, the Good Shepherd Society, that works with a major bank in Australia, the National Australia Bank. And through their partnerships with community organizations around Australia, they, I think, provide 170,000 loans. I offer that as an alternative model because I think in Australia then they have somewhat more centralized model where one bank, a very large bank in Australia, has been very prominent. In Canada, it seems like we rely on the very strong efforts of community credit unions. And I just wondered what you all think is the Canadian model. Is it working? Is it largely relying on credit unions' innovation? I mean, I heard your comments about the TD role in financial literacy programming, but I was wondering, what does TD do in terms of financial empowerment and providing financial services, and what is the role of mainstream banks?
I think that's you.
Targeted.
Yeah.
And thanks for your question. It's a very large question. So I don't know if I'm going to answer it to the point that you're hoping that I can answer it. I'm not a banker by background, so I will put that on the table. I do work, my background is more with not-for-profit, charitable sector, government. And so hard for me to answer the question. I would say TD is known as a bank that is more customer focused than a lot of the large financial institution, with all due respect to my other large bank colleagues. But the entire value base of TD has been about focusing on the customer and establishing those services around their needs. And so I say, but we're also very cognizant of the fact that we are accountable to our shareholders, and we are heavily regulated. So I think generally the banking sector in Canada obviously has a very good reputation. We were able to somewhat manage through the economic downturn because of how we're structured. I think the challenge is kind of getting all of these banks into a room. You know, large banks are risk averse. You know, let's not kid ourselves. And I think the challenge is the first one that goes out on the limb to kind of change the, you know, nature and environment of this is where the challenge lies. So if I had a vision, it would be sit down with the Government of Canada to see if there's 1 to 3, you know, key objectives that you want to get to change the way things have always been done. Because I don't think you're just going to get one institution doing it on its own. I think you actually have to bring people together along with the federal government. We are bound by a lot of regulations. And so as much as you want to be able to service at certain levels, we still have to meet these requirements. And there is a whole other layer of, you know, fraud and money laundering and all of these cybersecurity issues. And so these just add layers and layers of what we're capable of doing. So I think the first step is simply trying to get people around a table. The possibility of this new federal government may, you know, allow us to do that in terms of the perceptions and value base. But you're not going to be able to do it with just one institution. I think it has to be everyone around the table agreeing. So I'm a little generalistic in terms of answering your question, but that would be my vision of try to get together and think of, you know, a big thing we're looking at internally is all the aspects around social finance and impact investing. And how can we play in this space? And again, we are very bound by regulation.
Can I just jump in and say, and again, this is not an attack on the big banks. Canada has a wonderful banking system, and it stood us all in good stead. But why couldn't one institution make that their? Why couldn't they own it? Why? I understand the regulatory issues, and
Right.
I understand the need for government to be at the table in a way that they have not been, where the unbanked is concerned. But why couldn't sort of TD decide to own this part of the market and get out in front of it?
Well, we're trying to, and we're starting at the community level. It's hard. We are an international, you know, institution, and I would say for my role, and I can't speak to the overall corporate role, but I would say in my role, we're trying to start at the community level, more so than anything else, to provide us with those proof points that may give us some business ideas to do that in the future.
Lauren?
Yeah, it's a very, very interesting question. You know, the question of whether there is a Canadian model. As Valerie says, you know, the banks are multinational in a way that again, co-ops and credit unions aren't. And there are some interesting discussions going on right now about whether credit unions should remain provincially regulated or be regulated nationally like banks. There are all kinds of sort of regulatory frameworks. But the question of whether there's a sort of culture that is distinctive in Canada, a multi-sectoral culture it would have to be, you know, that would look to communities, would look to you know, one of the most astonishing things and one of the big barriers really to dealing with fringe financial institutions is that they are largely provincially regulated. So you do have this patchwork in the federal government, although it would be a nice thing to see the financial literacy commissioner, whose folks are still in the room, really crack down on, and I think they are wrapping their minds around this. You know, I was at a conference the other day with a number of mayors, including Naheed Nenshi, who schooled everybody in the room about referring to levels of government, implying a hierarchy, and said, really, we talk about orders of government. And the big mayors, big city mayors might have a really interesting role to play, rather like the American example of the 17 big cities who've, led by New York City, are looking at integrated plans for communities, but working with state and federal governments. You know, that would be interesting. And federally, of course, it's a new world out there, and the devolution of responsibilities to other orders of government will not be so much characteristic, I think, of this new government.
Thank you. Can we take a question from the microphone?
Sure. Hi, my name is Amal. I work in the asset building program in Winnipeg. As a frontline staff, I usually deal with our participants. I know their names, I know where they're from, I know their language sometimes. Their children might find me in the hallways and beat me up. That's the level of closeness that I have with our participants. When it comes to your frontline staff who deal with our participants, my question would be, what can you do to make it easier for their interaction? How could it be smoother? Because we're not all bankers.
I'll tackle that one, because that's a great question. Despite the earlier comment around the banks being intimidating, we empower our employees. First of all, our staff in our branches generally know members by their name, and we greet them by their name. We don't, when you come up to perform a transaction, we don't identify you by your bank card number, which, again, not to beat up the banks, but to swipe your card before you identify, it can be intimidating, because then it's that whole management behind the screen interaction. So we in our smaller communities, people do know each other on a personal level. In our larger communities, we take the time, whether it's calling to wish someone a happy birthday. We use our customer or member information very well to get to know our people. But we also are very respectful that situations are sensitive, and we've redesigned what we call the branch of the future, less around the interaction at the traditional teller and more into actual meeting rooms where people are more comfortable having discussions in private. So if you go into a new Meridian branch today, you'll see a very different design from what a traditional bank would look like. So that's an example of what we're doing.
Sandra, do you have a thought? And then we'll come out to the microphone.
Yeah, it was an excellent question. One of the things that we learned through supporting the Empower You program and working with the women, they told us they had never banked, they'd never stepped foot in a bank, and of course it was a huge trust issue and such. So we asked them, so what can we do to help mitigate that? So what we've been doing is working directly with the agencies that are delivering the Empower You program, and they actually ring ahead to the branch. We have ambassadors now in every branch that programs the programming is involved in, and the facilitators of the program actually call ahead to the bank and say so and so, or a few of them are coming in at such and such time, and we actually wait at the door for them and welcome them into the branch, and then to do one-on-one opening the account with them, understanding the literacy levels and things like that, the trepidation and stuff. So meeting them, taking them aside, and getting to know them right at the outset and such. And we found that has worked tremendously. We've had over 433 women have gone through that bank account. And we use that same philosophy throughout our banking services across Alberta. Such, it's about partnerships. It's about getting to know your customers. And when you can see that in times of trouble, you've got that relationship, and you can give them a call. When the fires hit in Slave Lake, we knew every one of those customers. We have a small agency there. We knew many of them were struggling. Many of their homes were burnt down. We knew those people. We rang them. We were proactive. Because you have those relationships, you can be proactive and say, we'll waive your mortgage for a year. We know you're going to be struggling. Don't worry about the mortgage. So it's about relationships at ATB.
Do we have a question at the mic?
So my name is Stacey Baker. I work at Bow Valley College in Calgary, and this might actually just be an extension of the last question. I'm wondering what training frontline staff get in cultural diversity competencies.
So I think that's really great, and both of you have a question about how do we serve people who are different than us better? And the challenge, I think, is that sometimes we do really well, but the moment that you do really awful, it's all lost, right? So one bad experience is somebody's pissed in the pool. But it's true, right? So somebody comes in and a mall may have told this person your experience is going to be lovely, and they deal with us, so I'm going to take ownership over this one. Go to your medical arts branch. They know the program. It's going to be perfect. And our regular MSR is on holidays, and there's a part-timer there, and they're having a bad day, and somebody comes in, and their English isn't really good, and the MSR is in a rush, and they get rushed through the transaction, and they get really rude service. And the question is, what next? So for us, when we look at training, it's not just in training, but it's why you hire someone. So we're changing, so in full disclosure, we want to be Vancity. So we very often look to the west for how they do things. We're trying to find a way to hire employees who are already value aligned or will very easily become value aligned with what we want to achieve. And if all you want is to be able to make money for the sake of making money, then maybe we're not the place where you should work. But if you believe that people bank with us because we do good things, and therefore they bank with us so we can use their money to do more good things, then you are in the right place. So if we start hiring people that have that approach, then we can move from that to explain where our members are coming from. I get the opportunity to talk to every new MSR cohort, so every single new member service representative gets my sob story of why they are actually the most important person in the company, and how they deal with their members is the most experiential and most important piece. We also then try and take learning opportunities. So in our experience, when somebody has had poor service, particularly maybe through the match savings account where something has gone off the rails, what happens is I just phone the branch and I talk to the manager member service. So that would be your frontline manager. And I say, so something went wrong. And often what we find is what the participant has told them all, what the participant has told you, may not have been what I said as an MSR, but it is what you had heard. And so therefore it doesn't matter to me what the employee actually said. What it matters to me is what did the member hear? And so why did the member hear that? Where are we going to go from there, and what is the learning opportunity we take from this? Because there are always going to be bad days, but the question is, do we have less of them? I think the unfortunate truth is that no matter what happens, no matter who we are, if it is not our normal, it means the probability of us doing it wrong is higher. So if I'm always dealing with somebody who looks like me, has the same story as me, and it's a normal transaction and it's a normal experience, then I'm going to be able to do that easily. But if someone talks differently than me, or looks differently than me, or has a different lived experience, it's an abnormal aberration. And it requires me to remember something different, and that means the probability of an error increases. So we try and either make them more common, so serving more people who are different than us, who are lower income, that are the different people that you don't often see in a branch. And then when we make a mistake, where do we go from there? And so that's our approach. I know it's not like the end-all be-all, and we're never going to serve every member equally well, and everybody's going to have a crap day in the branch one day, but the challenge for us is where do we start embedding those, where people matter, and why these things are different.
And I just want to add thank you all for being here, because I think you're representing the institutions that are working to doing better, working to be value-based, and just thank you for sharing with everybody.
Did you have something to add to that, Val? I know you reached for the mic on that one.
Just very similar, obviously, to what you were saying. With over 85,000 employees, we can't vouch for the behavior of every single one of them, and over 50,000 of them in Canada. But I would say that knowing your customer training and sensitivity training is part of the mandatory training they all have to take. And if I had my wish, I would add the layer that they all should volunteer in their community for the additional experience of how to properly tailor, because we do provide training for all our community programs that encompasses how the interaction goes with the segment that you're going to be working with.
Question at the mic?
Just one comment very quickly, and then a question, if you don't mind. My name is Salima. I work for the United Way in Calgary. The one comment is, just so you know, on the Canadian context, on the national context, we did write a policy paper to FCAC that had numerous recommendations, and so we can definitely share that with you. But just you were saying to come around a table and write some policy, and we do have that. So. Just so you know, it's there. And my question is just, we learned yesterday, and we're talking a lot about opt-out systems, about systems that take the sort of decision-making burden and out of the hands of individuals and put it into the system and allow for that wealth generation to be automated. Have you explored any of those in your institutions, whether they might be with tax returns or with RESPs or wherever they might be, and do you have any innovations to share in that field?
Thank you. Yes, and I agree. Looking at these as systemic fixes is critical. We work. Just to give a few examples, with the Omega Foundation, as does every that's right, TD and Meridian and some other financial institutions, in terms of building awareness and uptake of the RESP and the Canada Learning Bond, the Education Savings Grant, all of these, which actually rapidly build education savings for children of low-income families. And as always, the uptake is lowest in communities that need the most. We work with Equal Futures and their Ability Tax division on a similar partnership to increase awareness and uptake of the our DSP. And in that regard, we're working with an interesting multi-sectoral RDSP action group in BC, and government's at the table, Bank of Montreal and Royal Bank are at the table, and a number of partners in the community. So there again, sort of looking at ways of increasing the reach dramatically across the province. Just getting people to file income tax returns, of course, is foundational, and in that respect, we're again working with government and community partners, and the Vancouver Foundation has been critical in this. The calculation was that 2,000 low-income families in BC who weren't filing returns at all were leaving $10 million on the table in tax credits that they were eligible for, which gives a sense of the scale of both the problem and the solutions, or a partial solution. So, and this also builds on the previous question about just accessibility of accessible, safe banking services. And in that regard, we have Pigeon Park Savings as a sort of flagship program in the downtown east side, which is especially developed for products and services for the underserved and chronically low income. It's yeah, and in more foundational than that, just a last thought, is this sort of culture question of how members are perceived and welcomed and understood and known. And in that regard, and we're huge fans of Assiniboine, by the way, but we've taken that sort of cultural piece in the last few years to a new level. Every new hire and every existing employee in Vancity goes through a 1-week immersion program, an orientation program, where that is a very big part of it. And we learn all the time that we can learn from each other's experiences, that every challenge, and we often do get it wrong, not 85,000 employees, but 2,400, that there's a new thing from time to time. We had an experience, just to illustrate, the other day of a member who came to us who was neither a woman nor Muslim, but was concerned that our sign was exclusionary. In the branches, there's a sign that none of us had really given very much thought to, saying, please remove hats, sunglasses, and hoodies for security. It's important that we be able to see your face. And he said, a woman in a niqab might find that exclusionary. So within 24 hours, it had been through the, through security and through the branches and through, we have an advocacy opportunities review team that looks at questions like this, and it was reworded, saying, to assist with security, please remove hats, sunglasses, and hoodies, which we felt couldn't be misconstrued. Or we hoped that it couldn't, but those are the sorts of cultural questions and processes that we try to have in place.
I'm going to ask actually all of the panelists. It's such a great question. I don't want us to run out of time for all of the questions out there. Can you all share like one or two, just briefly, best practices or innovations? Because that's, I think, what people want to know what you're up to.
So you had asked about the levers and mechanizing choices, right? So essentially, do we remove choices from people so that they can, like, pulling
The
levers.
automation of
the
wealth.
automation, and the answer is no. We automate absolutely nothing for our members other than direct deposit. Because my question back to you is, at what point do we automate what decisions? Is it $18,000 a year? Is it that you make $20,000 a year and you get to make 3 more extra decisions at $25,000? So for us, like, our challenge, and I understand where the question is coming from, but like, do we automatically enroll every person with a baby into an RESP?
Yeah.
And the answer is no, because that's their choice to apply, right? We're not allowed to, by law, to say you require this financial product. We do, every person with a baby, tell them they should have an RESP. If you are under a threshold of income, do we automatically, or if you've self-identified as somebody with addictions issues, do we automatically say that your debit card no longer has deposit privileges for fear of using an ATM? Well, but that's only if you self-identify. So like, there's a bit of a challenges between paternalism, liberalism, like a paternalistic liberal, like libertarianism of like, you get to make choices for yourself as an individual versus it's often to our benefit. Like, I as an employee, the credit union just automatically enrolls me into the pension system after 2 years. Like, that works out best for me because I would not remember after 2 years to fill out a freaking form. But where do we go between human choice and responsibility and individualism and a paternalistic financial institution that tells you how the hell to do everything in your life? And I think that it's really hard for us to work through that. So we're trying, but the answer is no, we automate nothing.
That's a good point. It's a really good question. I think for us, the focus that we've been trying in the last while is getting, supporting agencies that are working with individuals to get their taxes filed. I think that's something we've been focusing on the last year through a funding mechanism. In Edmonton, we're partnering with all financial institutions. This has never happened before. Everybody's at the table. So 9 financial institutions are sitting together with the United Way. They're leading the way on this one. And we are working on a collaborative where we will start to do a train the trainer and getting individuals into the communities and getting those taxes filed for those vulnerable populations. So this is the first time that I've ever met all of these financial institutions, but we've got a purpose, and we've got to start somewhere. You can't have all these big things. You've got to start somewhere. So from our perspective, let's start there. And then the second piece is let's get some of those bank accounts opened as well. We know the government's going to be starting to do this direct deposit, so that's a second thing that we are working on, is making sure that agencies that we are partnering with understand that we are there, and we will go to the people to get those bank accounts opened if that's what it takes, through extra time and effort to get or wherever they want to bank. But importantly, let's get them to having access to bank accounts and taxes filed. We're tired of hearing those stories of individuals who had paper checks, $200,000, and it's gone like this. So that's kind of what our focus has been.
Just from a product perspective, we are looking at innovation, and I don't disagree with the earlier comments around, we don't want to automate everything for everyone. But there are, utilizing technology to help people manage what's important to them each day does involve some level of incorporating automation. And so Meridian is currently developing a product that will change our checking account product and link it to a savings account product that will both sweep balances, unused balances in checking that earn no interest, that financial institutions live off of, into a savings account that is the same rate no matter how much you have. And it will target alerts to tell you when you have bills coming due, when you might be going overdrawn, when your payroll comes in. But it will also transfer money back so that those very important insurance payments that you don't want to have returned are not returned. So we're using the technology of alerts, and we are making it inclusive to opt out. You opt in part of the account opening process. You have to opt out if you don't want, because we feel that it's extremely important in this day and age, particularly for low-income Ontarians, Canadians, who are living paycheck to paycheck, to know what's happening on their account. Yet at the same time, because of that, they're not saving the way they should be. And so we're trying to tie those two mechanisms together, and that is a specific product that we are launching next year.
Just quickly on our end, and again, I'm not in the product development business, so I'm not going to know all the intricacies around that, but I can say there has been talk around product development in terms of alerts and all of that. So those kind of conversations are underway because more and more online banking, more and more, the ability to connect with your customer directly that way is there for us. Savings accounts are really an area that we look at, and so the automated savings, and again, this is the customer's choice whether to opt into that type of automated savings or not, and you can opt out at any time without a penalty being imposed on you. And to give you an example, over the last few years, we've had these automated savings accounts, and over 2 million of our customers opted in and saved over $3 billion when it's done automatically for them. And it can, I can even speak to the fact that I have one of these automated savings account where whenever I use my debit card, $5 goes into, I apparently use my debit card a lot when I see my statement, but you don't even think about it, right? And so, but again, this was purely an opt-in mechanism where I chose that, and I can choose to cancel it whenever I want. But we are proud to obviously partner with the Omega Foundation along with several financial institutions in terms of the outreach and getting people to sign up for the RESPs and Canada Learning Bond.
Thanks.
Thank you.
First of all, I have to thank my predecessor to answer Amal's question. Her name was Dee McRae, and I'm a regional coordinator at Northwest Community College for 9 literacy projects. When she retired, she gave me a paper which I then took to all the banks and all the retail outlets in Prince Rupert about speaking in plain English. We have a lot of people who are English as a second dialect, meaning that their parents spoke an Aboriginal language, maybe didn't read and write, and it's very important. That was very important for me to have that dialogue with the people in bright yellow paper. That's the first thing I wanted to say. The second is harder. I have bipolar, and I have been deathly afraid of banks at certain times in my life. I have medication since 1990, but I've had episodes, and banks were often the place where it was difficult to go in, it was difficult to acquire money, it was difficult to relate. And I just want to ask you, because low-income people are a category, multicultural people are a category. I have been lucky that my bipolar illness, manic depression, and unfortunately, Donald Trump has it. He gives us all a bad name. It doesn't include psychosis, so I've never imagined anything. But I do want to ask you as panelists how you make help people who, at the time they may be in your bank, they may have money, but they may not have the ability to be coherent.
Just before you answer, I have to apologize because I have a plane to catch. So I'm actually, we talked about this before. We don't want to stop your questions, so I'm going to leave, and you should carry on. And I'm going to hand it over. I'm deeply apologetic for leaving, especially I want to hear this answer. Can I ask a favor? Sure. Okay. I have one more question that I wanted to ask. You can tell me later if you ask it on my behalf, and that is just these best practices that are so great at a granular level. Can they scale up? I'm going to imagine TD's not going to call me on my birthday. It was last week, by the way.
Did we call you?
But are there?
Did we call you?
No. But I just joined Bloomberg, and my email is alang40 because there are 40 other alangs at this company. I mean, when companies get big, it's hard to be personal. So I do wonder whether some of these wonderful ideas we're hearing, like no foreclosures, can we scale these up? Could we do them in a big way? So I'm going to leave that question hanging. I'm going to turn it back to your incredibly important question. And I'm going to thank you all for being patient with me leaving, and enjoy.
Thank you so much, Amanda. That was amazing. And we knew of your time constraints, and so we really appreciate you joining us, and we will ask that question. Are you guys okay if we take another few minutes just to finish up some of these questions? Awesome. Okay, so why don't we start with the question that was just posed to you guys, and then we're going to, no more questions, so you guys are up. I think there was one over here that wanted to talk at the mic, maybe? Okay, so just there's these last three, and then we're going to close it with Amanda's question, which is these interesting ideas that you guys have talked about, is there an opportunity to scale these up? So first, let's hear if anyone wants to respond to that first question.
So I think one of the answers for how do we deal with people who have unique mental health challenges, or we have members who, some of them suffer from schizophrenia, and they're some of my favorite members. So I have an interesting history with the credit union where I worked in community, and now I work in head office, and it kind of makes me sad. But one of our favorite members was a gentleman by the name of Wally, and he would come into Main Branch, and he was homeless, and he dealt with schizophrenia, and he was on social assistance, and his family was here, but Wally had lived a life where he was now sort of like distantly estranged from his family, but once a month he would come in with Mama's check, because Mama would give him a check to supplement his social assistance. And Wally was lovely. Like, Wally was a member, and I remember when I started working at Main Branch that the first person you got introduced to was Wally. And this is Wally, nice to meet you. And he'd always come in and hello beautiful, hello lovely. And we made space for Wally. Like, there was a pot of coffee put on check days because we knew Wally'd be coming in to sit and have coffee with us, and he'd spend 4 hours in our branch. And Wally was wonderful. He'd say Merry Christmas, Happy New Year. We did clothing drives for Wally. Wally was our team member. And then Wally turned old enough to get CPP, and he, with his pension, was kicked off of social assistance, and then without social assistance could no longer afford his medication. And Wally's mental health greatly declined, and I truly believe that decision is what led to his death. Sorry. But Wally stayed our family, and this is why we're a credit union. It's because when Wally died, we put money into the Mental Health Association in his name because he was a member and he owned a $5 share, and he had just as much right to sit in our branch and drink coffee for 3 hours as anyone else. And I think this is why we're different. And I don't think there are scalable answers for mental health and making space for people who will never fit in very small boxes that sometimes we try and put them in. And I think that what we need to do is make places that are friendlier, and maybe it relates back to the staff training and how do we make spaces. But I think that what we need to do is as people, as credit unions, as financial institutions, is find people and employ people like Wally, or who have family members like Wally. So when Wally walks into the branch, they don't see someone who is homeless and sleeping under a bridge and dealing with mental health issues. We see someone who is a family member and a team member and has value. I'm sorry.
Okay, thank you. Anyone else want to respond to that?
Mental health is a focus of our wellness program. So actually, we have programming throughout the year for our employees, because I think it starts inside the organization first and foremost, of education and understanding who our colleagues are. We have mental health awareness days, opportunities for leaders. It starts with the leaders and making sure there's that opportunity to talk about mental health issues within their work environment and things like that. So our staff absolutely are aware of mental health, talk about it. We have suicide prevention days throughout the year because we're 173 communities around Alberta. So it's something that's top of mind from a funding perspective. We do fund agencies like that, but for most part, it started for us to a common understanding, because how many times have you had an employee that's gone on a stress leave and nobody talks about what they were away when they come back? That's unacceptable to us. Yeah, so it's for us, it started inside the organization, and something we take a lot of pride in making sure that we understand all of the implications of mental health. And because we have such close relationships with many of our customers, we can actually pinpoint some of the bad days that they're having and maybe take them aside and say, do we need to call your caregiver today? Maybe this is not a banking day for you. So we are able to intercept on those days where that person's vulnerable, because we care about them. We also care about where their money's going that day as well.
I would just add that, earlier to my comment about how we're redesigning branches to to better facilitate more private discussions, interactions. We're also increasing our mobile advisor and support service force to go out actually and meet more members where it's convenient for them. So maybe in some situations it's not convenient for people to come into one of our branches for a number of reasons. We'll go and see them. So that's an area that we're expanding because that's what our members are telling us they want.
That's awesome. And I think there was a second part to your question, which is really around how can we make sense of the language and the words and the of the financial products and services that we see when we go into branches. We open up an RSP and then we get a stack of like 20 pages of lawyer speak, and they don't actually intend for you to read it, because if you did, you'd be hanging out too long. So, but maybe you guys could talk a little bit about that tension between wanting to be really clear and supporting people, especially if English isn't their first language, but yet that tension of knowing that lawyers need to be involved, and these are financial products and these are contracts. So does anyone want to speak to that topic?
Yeah, so I'm going to go back to the first question first.
Sure.
We made this an amazing video with our corporate responsibility report, actually, because we have a branch in Pigeon Park out in Vancouver, and very sad, and I heard our branch manager passed away. But I think was quite ill, and he recently passed away. But the tone is set with the branch manager, I find, at the local level. You get to know your community, you get to know your customers, and if you train your employees in your branch to welcome that community and get to know them. And so they speak of the relationship of someone that had mental health issues and homelessness issues. And this gentleman was so kind enough to share his story for this video that just talked about, every year they wish me a happy birthday. So we might not have done it for Amanda, but we did do it for this gentleman. And his reaction was, I was afraid to go into the building, but they came and saw me, and they came and talked to me into the community and invited me to come in for a cup of coffee. And so I really think the tone is set by the branch manager, and they get to know their community, and they have to get to know their community. And I know it's mandated in terms of how our branch managers have to view this role that they have and encourage their employees to act the same way. Unfortunately, I can't speak for every one of them that runs a branch, but that's the intent. In terms of plain language, there is an exercise going on right now in the organization to look at the plain language. There's been work with the federal government and looking to simplify that language. I don't read the 20 pages when I, purchase my RSP, and I don't understand half the wording, but I think the intent is to do a bit of the one-pager that accompanies all the legal gobbledygook that, again, we are regulated to provide, and that has to be included in the sale of a product. But the intent is to develop these plain language documents that go on top of all the gibberish afterwards.
So thanks a lot.
Thank you. Does anyone else want to quickly just address the plain language before we move on?
Yeah, I mean, these two questions are closely linked, of course, around access and what's friendly and what's inclusive and accommodating. And so I have a redoubtable colleague whom more of you will know than know me, who has tackled this in a very, in her usual sort of juggernaut self, and is translating our own internal documents at a great rate. But that there are so many good practices out there, really exemplary practices. I was reading some of Prosper's material the other day and just thinking what a pleasure it is to read plain language, eloquently plain language documents. So we all have, great exemplars to reach out to there. On the question, more broadly of just being accessible and inclusive, the culture nationally is slowly changing. That people feel able increasingly to say, I'm speaking from experience, and that's where we go to in Vancity is in this orientation session and in many other ways, saying, exposing our own lack of understanding, lack of comfort, It's very interesting when we were developing the curriculum for the orientation, questions about how would you accommodate a colleague who is blind or had MS, or and these were very easy, and there was no hesitation that all measures should be implemented to make those accommodations. When they said, you know, if you learned that you know, a colleague was schizophrenic or manic depressive, or you know, how would you feel and what accommodations would you make, and that was a much tougher conversation. So going, you know, going deep into our assumptions as a way to become better bankers is what we try to do.
I just want to add one real short story. Rural Canada does not have good mental health services. My town has 2 locked rooms with peepholes. I was admitted because a doctor from UBC said, you're old enough, 9 out of 10 people don't need medication. Then he got sick, my GP got sick. I got sick. I ended up in the hospital with a doctor who wouldn't calm me down. So I rearranged furniture in the lounge until 2 in the morning when a male nurse said, from Prince Rupert, if you really want to go back home to Gaspé, Quebec, why don't you just leave? So without shoes, without money, in the middle of the night, I left the hospital. I ended up at my, can I say brand name? At my TD Bank, and they know me, and they let me stay in the staff room until my RRSP was made into money for myself. And, you know, that is something I'm real happy about.
Yeah. Okay, quickly, Jeff, and then we're going to move on to the last 2 questions.
Just on the documentation and keeping things simple, you know, I think start with your products and services and make sure you're as transparent. Keep them simple as possible. It's very hard to plain language a mortgage agreement or an RSP document, or even if you know, when you click the box on online disclosures of all the things you just agreed to and you just scroll to the bottom. It's very hard to make that plain language, but what you can do is you can empower and train your employees to tell them, to have the discussion with our member, about what it means to them. What does what does the loan collection or recovery or delinquency, what does that mean? What does a mortgage penalty look like in your situation? And the very difficult subjects that we often skip over and are historically could skip over on what that might mean, knowing that that very situation might happen to this person. You know, to your earlier point, many of us have just signed things, and it'd be nice to get rid of it all, but it's not going to happen anytime soon. So what we can do is make sure that people understand what it means to them, and our staff can do that.
Great, thank you. So what I'm going to do is I'm going to have you ask your questions, and then you can ask your question after, and then we'll open up to the floor to see who wants to respond. Thanks.
Thanks. I thought since I'm Jessie, I'm with Affinity Credit Union in Saskatchewan, and I figured what a great panel for me to ask a really important question that I see happening a lot. I do financial education in our communities throughout Saskatchewan, on reserve, off reserve, urban and rural. And one of the things I spend a lot of time actually explaining through are NSF charges. And for anybody who doesn't know that acronym, because you're not in banking, don't be afraid. It's the non-sufficient funds fee that does occur on accounts when something comes through your account automatically or a check comes through automatically and there's not enough funds in there. I just wanted to pose a question to you, because this is something that's been kind of going through my head as I'm out in the community, is as financial institutions, we see the detrimental effects that NSFs happen to, because it tends to happen to our lower income or our middle income families that are struggling day to day. How can you see us evolving a product that's more friendly to this income level?
Awesome. So we're going to hold on that, and we'll hear the second question, and then we'll just open it up. So thank you. Really important question.
Sure, thanks. And if you want to tie my question to Amanda Lang's at the end too, that's fine.
Okay.
My name is Megan Daly, and I'm the founder of Forward Vision Games. We're an educational technology company, and we focus on teaching people how to make a financial decision. My question relates to the process of innovation, both utilizing educational technologies in your companies, as well as not just the linkages you were making between helping people with product connections, but actual new financial technologies. I know in the space that I'm in and the innovation companies, I've actually seen a ton of innovation in India and in Africa in those spaces with access, where 65% of adults don't have a bank account. So those institutions are actually, they seem to have a really great process in line to adopt technology and to adopt it faster. I'm wondering what your organizations are doing in terms of plans for that, how you integrate, and sort of what the next 5 years might look like from a technology perspective to help solve problems.
Awesome. I am going to weave that into the last question. So first, we'll talk about the NSF fees, and is there a different model that people are exploring or want to comment on?
I would go back to an earlier comment I made in the intro. At Meridian, we historically have leveraged a call before you bounce. So we try to avoid that fee. I mean, that fee is very punitive. It's gone up. It continues to go up in the industry, and is really, and embarrassing for anyone that's had a bounced payment. Is probably one of the most difficult situations you have on a day-to-day basis, or a declined payment. So our historic approach has been to call and say you're overdrawn. Is there something we can do today to help you? It might be short-term lending. Adding on overdraft and additional lending is not always the answer. It's sometimes more about a cash flow timing situation. But historically, that's what we've done to avoid that. That comes at a human cost, but we're prepared to support that. But going forward, as I'd mentioned with technology, replacing that through innovation around alerts and letting people know when it happens, when it's happening. Ultimately, remembering that the money we lend, whether it's authorized or unauthorized, is other depositors' money of the credit union. We have a responsibility to make sure we understand, and the onus on us to make sure we understand the member situation. But utilizing technology can really help reduce the burden of that fee. So I'm not saying that Meridian's working on a no NSF account, but we are leveraging technology that is enhancing our current process to make sure that we can have our members avoid paying that.
Anyone else working on something?
I think for us the challenge with the NSF is what we often see is one NSF is like upsetting, but it's the multiple NSFs from automatic withdrawals that most of us deal with. So the benefit is you write a check, you bounce a check, it bounces once, that check is done. But if you have an automatic withdrawal come out of your account for $300 and it bounces out, then that's a $40 fee, and then they'll try later in the day for $301 and that bounces out and that's another $40 fee. So very quickly you could escalate fees and overdrawnness and then everything is gone. And for us, what we're trying to do is find mechanisms which we would be able, so we have over 100,000 members, and so it's difficult to say that, like, I will sit there and watch your account for your withdrawals. But we're trying to find a way to automate a report that the moment an account goes into the red, so you owe us 3 cents, 5 cents, $40, that report is automatically generated every morning, and then we were able to call you. So that way, if we know that that payment has bounced, let's see if we can stop that payment. Let's see if we can contact that creditor, or you can contact that creditor, and that money's not going to be there, and they can stop withdrawing. So at least we don't end up in the cycle of, it's a process. We're trying. It's very clunky. We're not very good at it, but we understand that the repetitive NSF is something that is incredibly detrimental to most people, but especially those living in low income. Since I can bounce an NSF check and $40, that's gone, so now maybe I owe a little bit more, but for someone who maybe $80 is all the money you're getting for the week, that's a bit more of a challenge. So yeah, we're trying poorly.
Thank you. So I want to close this off by giving you each a chance to have about 30 seconds to really reflect on the question that Amanda wanted to pose. And there is a tension, and we feel it in social services as well, around that individualized support. And I think Louise yesterday talked about these boutique programs and this idea of scale, and what does scale look like if we were to expand this to more individuals. So I'm wondering if you could take 30 seconds just for your final comments to talk about what your vision for this work is and what scale might look like for you. Do you want to start, Valerie?
Yeah, sure. I think my first vision is that I would love every child going into the public school system to learn the basic financial concepts at a very early age. I think that's my number one vision. I would love to see great. Right now, we have a program with Girl Guides of Canada called Girls Count, and for every level of these units that they have, we've developed a financial literacy program where their guiders or TD employees, TD female employees, are delivering financial literacy skills. So if I had this vision or this number one thing I'd love to see, there's a lot of curriculum work being done with the provinces right now, and the education system is obviously, led by provincial governments. But my goodness, I would love to see, starting in grade 1, grade 2, kids learning some of the basic financial concepts, and therefore helping parents who are they themselves feeling uncomfortable with this topic and helping them teach that. So I think that would be my number one thing. And then, it's almost, everybody's got this goal of wanting to bring all the resources together and having them in one
in one space where people know where to access it, but on the flip side, that's tremendously overwhelming in knowing what is useful and what is not, and what's the. So it would be wonderful to have some at least streamlined programs or resources that are tested, proven, have shown the outcomes that we find can access, and we find those, whether it be federal government, provincial governments, but those who have the biggest access to as many people as possible for communication, to be able to communicate that. You know, especially as a large financial institution, I won't deny that there is some sort of skepticism from us promoting any type of program, even though it may not be linked to a single, you know, we're proud of the fact that our community programs, the ones that are funded through our team, there is not a single product sale in any of these programs. But of course there's a skepticism if it comes from a large financial institution. So finding that voice that can communicate that on people's behalves.
Awesome, thank you. Jeff?
I should have gone first because you stole my answer. Because I, like you, believe that there's a great failure in the educational system to support financial literacy. You know, when I was in grade school, I learned home ec and shop, and you know, those have proved me well to, you know, bake muffins and change a tire. But wouldn't prove me well with the challenges that, you know, my kids are facing. I have twins, they're 12 years old, and you know, I've done my best to open accounts and set them up with savings and help them make their own decisions. But I've done that all, you know, because I'm in financial services world, and I know that they're not going to get that. And so to continue to see, you know, next generations of our youth graduate without these skills, and some of them choose entrepreneurship and fail because they don't understand the basics of finance, and many more will choose that. And also the increasing amount of information that's online that, while interesting to read about and to educate themselves on, isn't relevant necessarily to their own financial situation. So equipping the youth with the ability to make smart financial decisions like saving early, and the power of what that means later in life, to me is a failure. Going to the scalability question, Amanda picked on me for my call on your birthday thing. You know, that's very easy to scale through technology. I'm not saying that a computer would phone and wish you happy birthday, but from a notification perspective, we can scale a lot of the personal things we do today. We just need to continue to make sure we recognize an organization it's important.
Great, and I think to do Amanda Lang's question justice, I think what she was referring to also is, like, within those initiatives that you guys are driving within your institutions, how can we bring those to the next level? How can we make those available to all individuals? So that's something to think about as well. So thank you. Sandra?
So with that in mind, I was mentioning earlier our junior ATB program, where we partner with elementary schools in Alberta. We have 51 right now, and we've been working with school boards to say, hey, you know, let's if we could work together and partner with them, let's get some of those financial banks happening in schools all over Alberta. Obviously, it's resource intensive from a branch perspective, but we really see that opportunity. This is an opportunity for us as a financial institution to use our expertise. This is what we're good at. This is what we know. So we're going to be focusing on that and continuing our work with junior ATBs around the province. The next year we'll be focusing on more Métis settlements and more reserves. We've heard loud and clear there's a need there, and we've actually, again, can't do everything on our own, partnering with Rochelle Venice here at the Institute. She's the president of the Institute for the Advancement of Aboriginal Women, and we'll work with her as a partner to help us get into those communities. But we're not just going to work with the children in the schools, because that would just, for us, we want to also work with families. So while we're there working with the children, doing financial literacy, we'll be working with families as well, offering financial literacy to the families through associations there. So that's our big focus. Our second one is, and we hear these stories all the time, is focusing a bit on women with understanding budgeting, and you keep hearing these stories, and it's not just women in poverty, it's women in general. We've just heard another story where there was a member of parliament, I won't tell you who had a situation where she was suddenly left to manage her own finances, couldn't do it. So we have work to be done all over the place. So for us, is being able to share that expertise through some workshops and things, and making banking welcoming for people so that everybody has access to that information and that empowerment, because it's really one person at a time that we need to be working with.
Awesome, thank you.
So I think some things are scalable. So using technology in banking systems are incredibly smart and can pull levers and make levers. So if we were to build products and services that met the needs of the members that you serve, I think in that case it would very much fit Elder Shafir's idea of that we would pull levers and not ask you to. And if we were to design a product like that, it would be completely scalable, right? So the match savings account that Assiniboine offers, we have shared with Westhoba Financial Credit Union, or like Westhoba Credit Union in rural Manitoba. We had conversations with ATB about how to build their own match savings. And essentially we built this wonderful product. It does really well for the Winnipeg Asset Builders Partnership, and we own it, but we will give it to you or help you build your own for your products because we understand that this product is built in with technology to be able to benefit many. So great, let's scale it up, let's make it do the best that it can do. But the reality is that there's some things that cannot be scaled, and I think that the human relationships that make the Winnipeg Asset Builders Partnership work, so Amal's knowing the kids in the family and Louise knowing the participants and Seed hiring former participants, that is not scalable. And our commitment to be able to provide really good service to every single community organization with an asset building program is also not scalable because we don't want it to be. There are some things that cannot be scaled and be done well. And I think it's dealing with multi-barriered community like individuals that have really interesting and complicated lives. You cannot always scale really good program service delivery. And so we choose to work with organizations that have the same values match with us, that work along the same visions, that have the same community economic development approach, and those are who we will work with, and that's where we spend our time and energy. And maybe somebody else is going to do other things, but these are the things that we focus on because we don't believe that indefinitely we could scale that experience for every single organization, and we're okay with that. We want to do well what we can. And when it comes to technology, I think our credit union calls ourselves nimble followers. Meaning that there's no way that we can afford the technological and financial investment to be able to do, like when CIBC showed up at Tim Hortons and was like, I can tap my phone and now I can pay at Tim Hortons, like that's really neat. We're never going to build that. Like we just don't have the money to be like, that's what we're going to develop. But like me-to-me transfers or mobile apps, yours works well, great, now we'll roll one out too, right? So we try and follow quickly, but we will never be the innovators when it comes to technology because it is far too expensive for a credit union, regardless of our asset size. Like we're big fish in a small pond, but when we play up against the big banks, like they are the innovators when it comes to technology because they have the financial resources to do it. So that's our challenge.
Awesome, thank you. The final word.
So I think everyone's spoken to scales of scale and where we begin finding those advantages of scale. So we do, I think we all start with our own approaches to economic inclusion, including the financial literacy and all the facets of economic inclusion. At Vancity, we're trying to look at products and services and knowing our member and the integration of our core principles as a way of looking at a holistic approach to economic inclusion. And that does, that the more integrated we are, the more nimble we can be at developing solutions that can go to scale. The next order of scale, and in that respect, working with our partners, sharing our Each One Teach One financial literacy module, which is going to Edmonton shortly to work with 11 financial institutions which have expressed an interest in adopting this approach to financial inclusion. Our Fair and Fast loan is also doing the, being shared. So, then you're scaling exemplary practices as drawn from everywhere as we work together. We can draw on each other's strengths. And then the last order of scale is working together as advocates at the community level, in business, in the financial sector, and across government, working to shape a landscape which is more enabling of all of this work. And they're, looking at not a deficit approach, not a welfare approach, not a piecemeal and patchwork, attempt to lift people individually and in small groups out of poverty, and it doesn't result in lifting anyone out of poverty. It is really a patchwork and temporary solution, but scalable, sustainable solutions through an asset-focused approach, that we look at the income tax platform, at credits, that we look at citizens' dividends and guaranteed annual incomes and ways of recognizing that, applying the blind justice. Any one of us could have ended up in these circumstances, and that there is a way, and maybe that's the Canadian model that eventually we'll be able to speak to. That there's a way to eliminate poverty, and that's I think where we're all trying to head.
What a great way to end. I think this panel, This panel, more than any other, was requested by all of you, and I think we could talk to you guys all day. We really appreciate you guys going over time and answering all these questions. If we're going to achieve this financial well-being and the sustainability of this field, it's really through partnerships with you guys and your leadership, and you guys are pioneers for sure. And we're going to check back up with you guys in two years to see how we're progressing. But join me again to really congratulate these speakers. Thanks, guys. Yeah.